7, which is the update from the Wales Pension, the Wales Pension Partnership, the WPP. That starts on page 39 for those of you who want to read along. So Alex, back over to you. And again, I think I've asked Alex in a bit more to give a brief overview of actually what the WPP is before we then go into the update. So Alex, back to you.
Yeah, thanks, Chair. So for those members that have been on the committee for a 12-month or more, you'll be familiar. This is a standard quarterly update, but for Councillor Best. Basically, as I said, there was a government initiative going back to sort of 2016, 2017, which was to rationalise the sort of 90 LGPS funds and form half a dozen, eight LGPS pools. So essentially, those pools had a purpose of, through having representation of the underlying funds to the scale, economies of scale, which meant that you could sort of influence and have ability to ensure fee saving from the investment managers we use. So rather than everybody appoint the same manager, it would be done through the eight forums. It was the sort of, in essence, what was trying to be achieved. So the fee savings, stronger investment performance in the long term, but there were also some sort of non-investment specific objectives as well, things that you can benefit from through the collaboration, sort of best practice and things like that, but also what we're seeing most notably probably is the work that we can do through the responsible investment agenda. So within Wales, we established the Wales Pension Partnership. Worth saying it's a model that is sort of different to the majority of others in that it's a rented operation. So Wales have appointed external support that provide the infrastructure and the investment management expertise on our behalf. So that's why we call it a rented operator. The difference being that some of the other pools, the likes of Brunel or Boards to Coast, have an in-team structure. So they're sort of an investment management firm, FCA registered in its own right, that provides the host of services to those underlying authorities. And some of our advisors around the table and online represent other funds that sit within those pools and could share some different perspective, I'm sure. In Wales, we have eight pension schemes. Say we use a rented model. Carmarthenshire County Council or Dyfed Pension Fund are the sort of host authority. So they're not the lead. They just host the partnership on behalf of the other 7 funds. And collectively, we've got a number of governance matrix and mechanisms in place to help support that agenda. The main political decision-making body is the Joint Governance Committee. That is essentially the chair of each of the 8 pensions committees, in our case, Councillor York, meet formally every quarter to consider the business of the Wales pool and obviously take decisions based on recommendations, much like we have in the forum, but on a bigger all-Wales scale. We also have an officer working group, which is typically represented by the sort of senior pension fund officers, so myself and Nigel are the 2 representatives that represent those forums. And again, we're sort of working through the agenda and making sure that we are progressing the objectives of the JGC. There are a number of smaller subgroups then that are formed within that assist things like risk, responsible investment, the technical accounting, etc. And that comprises of representation from officers and advisors across the eight funds. We also have a number of external advisors. As I say, we use a rented model. So Link Fund Solutions are the operator, the kind of FCA regulated body that ensure that we are compliant with the sort of launch of sub-funds. We've also appointed several investment managers now, but predominantly the major relationship is with Russell Investments. That's the appropriately qualified external investment manager that provide the investment sub-funds across the equities and the fixed income, which I talked about in the prior offering. So the idea with the Wales pool is that they provide us with investment solutions that we can invest in, which through the economies of scale delivers that lower fee, as I said, but also the support of the collaboration. With that in mind, this report I bring in every quarter to the Pensions Committee, really just to give an update of all of the business of the pool. There are a few appendices, which are probably the easier point to reference, but I think just quickly on page 40 of the papers, and I'll cover this in the appendix in a second. Link Fund Solutions provide a report on the value of the individual sub-funds and the investments that are available through the Wales pool each quarter. worth saying that this is always on a time lag. So what we have here is the March 2023 report that went to the Wales pool, which subsequently reported on the prior quarter, hence why we're talking about December figures. We do have more updated figures which are elsewhere on the agenda. But what you can see on paragraph 4.3 is the essentially the exposure that the Greater Gwent Pension Fund has to the Wales Pension Partnerships investment sub-funds, as I say, December figures. So that's the global opportunities, again, that's equities, UK opportunities, and emerging markets are all equities. Global passive, so that's a global equity mandate, just managed slightly separately under a separate arrangement. And then the two fixed income mandates in credit and global government bonds. You can also see in brackets when the Wales pool launched those investment products, which, as you can see now, some of them are sort of around 4 years old, to the more modern ones are perhaps just over 2-3 years old. So that's essentially the key points I wanted to make there. I think I'll just move to the appendices, because I think that's the key parts of this update. Starting on page 43, this is for information only, but it's essentially the minutes of the last meeting, draft minutes, I should say. They haven't been agreed yet, but these were the draft minutes from the March 2023 meeting. You can see in there the key points from the agenda and what was discussed and the decisions that were taken. Moving to page, I'm just trying to find the number, page 51. So this is the quarterly report that is prepared by Link Fund Solutions, who are, as I said, are the operator with the FCA responsibilities. Page 52 is essentially an alternative way to show what I presented in the cover report, which is the various pie charts show the investment offerings as of December. As you can see, the Greater Gwent's proportion is marked up with Torfaen in each of those, just for your information. Page 53 shows the fixed income proportion of the fund. Page 54, again, it's another way to present the same information, essentially. What is notable is that as of December, Wales had pooled 15 billion of its assets. So overall, around 2/3 of what is available in the long term. Pages 55 onwards are about more of the governance and the regulatory aspect of the service that they provide. Page 56 talks about the key activities and key work that's ongoing. In terms of Sustainable Equity Fund, this is a new investment offering that's come forward. The fund has given its indications from following approvals to invest. That's looking to launch in the next couple of weeks, so we should have that investment on board. I think that's a real positive step in terms of our climate objectives and that sort of work that we're talking about with the net zero. The second is a more sort of just one for noting, really. It's a change of underlying investment manager in one of the sub funds, which is something that we'd agreed as officers in prior months. Pages 58 is more of the corporate update, and within this, there's a lot of work ongoing, and there's a long-standing history with this in particular, which I won't cover today. It's well known and sort of publicly documented. But essentially, Link Fund Solutions have been subject to a buyout or a takeover for some time. More recently, and what this update really essentially confirms, is that there is now a preferred buyer, which is Waystone Group. That work is progressing. We understand that they're in sort of exclusivity now in terms of finalising that arrangement, which we would expect, subject to any changes or any sort of change in direction by the end of 2023. The remaining parts of this update just really cover off the engagement and the work that the WPP and the interaction it has with the operator, which again is just for information purposes. The final appendix, and this is assigned to the recommendation in the report, is around the publication of the business plan. In terms of just taking this back a step, so the Wales Pension Partnership, as I say, it was created on the back of a government mandate. There's an IAA, which is a document that basically sets out the inter-authority agreement, which sets out the basis of the arrangement, the partnership between the 8 funds and the Wales Pension Partnership. One of the requirements within that is that certain decisions that are taken as the JGC of the pool have to come back to local decision makers for final approval, and this is one of them in terms of the business plan. Essentially, this document is prepared and published annually. as you can see, it's set on a three-year basis, and that's updated each year. It was approved in March by the Joint Governance Committee, and hence now is coming back to individual authorities just to approve. I wasn't planning to go through the detail. I think actually it's a useful reference point for all members to get more familiar with what's involved in the Wales Partnership. It does cover all aspects of the background, the governance, risk management, objectives, beliefs. It's quite a comprehensive document. I think, as I said, I've sort of talked at a high level of the governance structure. Page 67 provides more details, albeit it's quite small there. I can provide a bigger version outside of the meeting if helpful. That shows the sort of the framework and the matrix in place for decisions and how advisors and local input affects some of that. Say risk management is in there, the objectives. I think probably another section for members to be familiar with is some of the policy documents, and they are quite comprehensive now. We've built that out over a number of years as the partnership has moved from getting itself established to more of a business as usual type function. Again, the work plan is another aspect which demonstrates the level of work that's involved at a high level, albeit it then also talks about what areas of focus are in scope for both officers and what eventually the Joint Governance Committee and subsequently Pensions Committee need to be mindful of for the year ahead. Unless there's any questions, I should have added, sorry, that there is a budget section in, and so again, the differences in the LGPS models in terms of how we function with the rendered approach generally means we keep costs down that way. In my experience, having seen how others work, the budget is there in terms of 23-24 out to 25-26. So the big proportion of that cost is in the operator and the allocated services, and that essentially is the cost of managing the investment, so the underlying investment manager fees. And typically that is charged as a percentage of how much we have under their management. Hence why you're sort of looking at those sort of 37, 40, 45 million figures. Generally speaking, the host authority and external advisor costs are modest in terms of maybe what others are spending. I think that reflects the way that we're trying to do things in Wales as well. I think the remainder of the document essentially is there for information and for members to read. Happy to take any comments, but essentially it's asking to approve this one, if that's okay.
Okay, thank you, Alex. So, members, any questions or reflections from the paper? Take that as a no. Similarly, I mean, if the board members that are here, if there's any questions or thoughts you have, and equally, I'm happy to take them from the advisors as well.
I'm happy with the document.
Okay, fine. Just one reflection from me, now having been on it for 12 months. I must admit, I was a bit overwhelmed by the WPP when I first went on there, because it was just the amount of information that was being thrown in our direction. Having now actually met, what is interesting, I think, is just how useful and important it has been to get back to meetings in real life and actually meet the people, the other folk from the WPP in person. I think some of those meetings, when we're confined to teams and there's 45 people on there trying to get their heads around a training session, is a bit possibly not as impactful as it could be. But I think my reflection now 12 months down the line is, curiously, I guess, is just how well the WPP works as a collection of authorities and the relevant individuals from those authorities, and generally just how flat a structure it is. And actually there's very little hierarchy there, and it's just an opportunity for the senior officers and the members just to have proper conversations about where we think things should be going. So I'm a much bigger fan of the WPP this year than I was potentially at this point last year. So that's my only reflection. And I love you all dearly. That's not meant as a diss to anybody. So taking members' attention back to page 41 then, and paragraph number 7, just to echo Alex's comments from a moment ago. Is everyone happy to note the content of the report and then also to approve the WPP business plan for the period 2023 to 2026? John's nodding. Carl's giving me a thumbs up. Alfie, fantastic. Me too. Okay, excellent. Thank you very much. Item number 8. Back to the chap to my right is the quarterly investment performance report up to year ending 31st of March 2023, starting on page 79 of the pack, and again over to Alex.
Okay, so with this report, again, it's a standard quarterly item. We'll be pleased to hear. I'll pass to others to do some talking as well in a minute and give a bit more of an insight into what's going on. I think I'll just cover the key points and appreciate it for Councillor Best's first meeting. Obviously, as we've talked about with the investment strategy, another major main priority and focus of the committee is oversight of the investments. So hence this report is an important one. It is only for noting, but happy to take any questions. It is intentionally comprehensive given the extent of the work that we do and the active investment oversight as officers that we carry out in the quarter. So just to cover the key points really before I invite others to comment. This report covers the period 1st January 23 through to the end of March, which is what we refer to as quarter one. As you can see within the key messages, which is on page 79, the fund had a positive quarter. It delivered a return of just over 3.5%. That did marginally underperform the benchmark, i.e. the target, I suppose, that the investment managers are basing their activity against. Key point in terms of what we are trying to achieve is that for the majority of our investments, we pay an active management fee, which is more expensive, but what we hope is that means the manager can beat the benchmark return. So in this case, over a particular quarter, they've fallen slightly short of that, marginally short. We're not too concerned, but obviously over the long term, we would expect all of our investment performance to achieve that outperformance. What that 3.5% means essentially was a £133 million improvement on the value of the fund to just over 3.75 billion. I won't cover too much of the macro because we've got experts in the room and online that can cover that in more detail than me. I think the point that I would also make, and that this comes back to an earlier comment made on the investment strategy, is in paragraph 3.3. We are a long-term investor, regardless of that sort of short-term quarterly performance, and we've seen some significant swings, particularly over the last 3 or 4 years with the likes of COVID. Members should remain mindful of what we're trying to achieve in the long term, which is that sort of 4.3% target, more like a 5% realistically. And as you can see in paragraph 3.3, over a 3, 5, 10 year, and since inception, which is going back decades, the fund has exceeded or has delivered that positive performance return. And as you could see in some of the appendices where there's some detailed graphs, that would show that it's actually outperformed the benchmark. And as I said, we're paying that active management fee so that you would make the case that was money well spent in terms of delivering that. I think at that point, what I would do is invite Ethan to make some comments on the macro. Did Ethan not come back? Okay. It doesn't look like Ethan's in the meeting. In which case, perhaps if I invite Betty to just make some comments. So just in terms of clarity in the role, typically Ethan will present the macro report, which is available within Appendix 1. It's a detailed report on what's sort of seen in the quarter and quarter to date, given that we're now a couple of months in. Betty, in terms of the role that she carries out, is to support Lewis and I really in meeting all of our investment managers each quarter. So we've got a really good perspective in terms of how things are going, what's working well, perhaps what's not working as well. And so perhaps just an opportunity for you to hear from others in terms of that in the last quarter from Betty.
Thanks. Turn the microphone off. You're on mute. Anyway, yes, thanks, Alex. Not to repeat what everybody may have probably already read in the report that Ethan does, which is fairly comprehensive. But as you gathered both from this report and then also from some of the other agenda items, much of this year 2023 to date, and especially the second quarter, has been market trying to guess whether, or first quarter, whether central banks are going to raise interest rates, whether inflation really has been tamed, or whether we have to have more hiking. And I think one of the big themes running through this is, despite some market volatility, despite bank crises in the U.S., small regional banks, or even Credit Suisse, UBS, all the main developed market central banks in the West have nonetheless continued with their rate rising. There's Ethan.
I just got the notification.
I was just starting in your. We were trying to get you. It's talking about this theme about the continued battle against inflation and rate rises, and markets guessing will they, won't they, where are we on this sort of, nearing peak rates. But you can take over if you'd like on your report.
Oh no, just was there a notification that we were back on? Because I just got the message from Lewis, but did not get anything previously.
Anyway, let's just go.
No, just wondering whether there was a notification that we were back on. I apologise because I didn't see it.
I think what it was, Ethan, everybody else might have stayed logged in. So when we restarted the meeting, everybody else was already on there. And quite frankly, we didn't notice that you weren't there. So
okay, that's fine.
We've gone from technical error to user error in the space of 20 minutes.
No worries. I thought that I was waiting for a notification. Okay, so Betty, we're ticking off on the macro report.
Yes.
Excellent. So as far as the macro report is, obviously this is a time when we are changing the views start to change on a weekly basis. So having a cutoff at the end of May, there may even be some changes in the interim, but really just looking through some of the points. And I'll just back up in terms of setting the scene for this report as far as what it normally contains. So because the role of this committee is around asset allocation, we believe that the drivers of asset allocation and the relative attractiveness of the asset allocation individual segments is driven by macro factors. So even though we are a long-term fund and do not take into account, we not do any tactical trading or short-term trading, we would nonetheless have need to pay attention to macro factors and the backdrop, because this informs the attractiveness of different asset classes. So earlier there was a discussion of the asset allocation framework and fixed income, how that's becoming relatively more attractive today as piece of our of asset allocation. The reason that's becoming more attractive is due to the very fast pace of interest rate rises that we've seen from the Bank of England. They've had 12 consecutive bank rate rises. And that's why we have to pay attention basically to that entity as well as other macro factors and look around the globe for pointers as to what the direction of travel is likely to be. So just moving into this report, I'll just, sorry, I was still at the other part of the agenda because I didn't realize we'd moved on. So just bear with me while I get to exactly where we are. So yes, so starting on page 89. So just in terms of what's going on, the key is on the recession point is this is probably one of those most widely forecast recessions that we've seen in recent history, but it is yet to actually materialize in that it has been continuously kicked down the road by either exogenous events. In the case we had the World Cup, we've now had the coronation, we've had various events that have sparked consumer spending and resilience where normally you would expect to see more of a dip. We are still being propped up globally by a very high level of employment and low level of unemployment, and that is leading to resilience in the consumer, an ability to keep spending. Some of that is COVID era surplus in terms of savings, but overall the consumer is more robust than we would have expected at this stage in the cycle, and that is generally leading to some kind of kicking down the road, as I said, of this recession. However, there are some key differences starting to emerge in the global experience, and the UK, unfortunately, is on the more negative end of that spectrum of experience. What we've been seeing globally has been the spike in inflation and generally a ticking down of that inflation as some of the COVID excesses have come out of the system. Some of those related to supply chain choking off and other of that related to certain things such as the war in Ukraine, which was leading to higher than usual energy prices. In the UK, what we've seen is inflation has been particularly high. Some of that has been stoked by a weak sterling, which generally leads to higher imported inflation. And then with the mini budget and some of the events of last year, there was a perception of a frailty of the UK economy, which was again leading to that weaker sterling and kind of a vicious cycle of more inflation. So the story in the UK right now is that inflation is proving to be a bit stickier than it is elsewhere. We saw the UK inflation, it's now down to below 10%, but it had been hitting that 10% mark for somewhat higher, a longer period of time than we saw in other economies. And that would lead to expect that there could be some divergence in terms of what the Bank of England needs to do to keep that inflation in check. It has continued to raise rates, notwithstanding some reasonable volatility and fragility in the UK economy, notably that at the end of last year, the gilts crisis and many defined benefit pension plans, not the LGPS, but corporate plans did end up in crisis as the gilt prices had fallen and the yields had risen. And that phenomenon has led to a fragility which is still there and some volatility which we're continuing to see still there. But we can see that the Bank of England raised rates notwithstanding that. So it is definitely on a determined course to keep inflation in line. It seems to think, however, that inflation will start to buckle in the next over the next year. But there's a chart later showing that, but it's not clear that that's the case. So the interest rate and inflation picture very much tied up, and we're joined hand in hand, and we'll be looking at that carefully as we look at the attractiveness of various asset classes. I've mentioned employment. I'm just moving through page 90 now. The other two, macro factors that have emerged over the last quarter, we did see in the US a regional banking crisis start to emerge around about the middle of the first quarter. This was due in no small part to the fact that some poor risk management on the part of certain banks, but also the crisis that we saw in 2022 due to that raising rate cycle. The unprecedented crash in bonds has been the worst year since records began in some cases, has had collateral damage to those financial institutions that have been holding those bonds. So that has been a case that is, we think, still to play out, and that we don't think all of the damage is done yet or has been seen yet. But seeing a financial crisis like that, a banking crisis which manifests in a bank run, in that we saw depositors withdrawing their money in very swift order from banks in order to find security elsewhere. That kind of panic is something we hadn't seen even during the financial crisis. When we were looking at 08-09, when we saw banks in some trouble, we had not seen that kind of capital flow. So clearly that's a spectre that we would not like to see repeated. So watching that very carefully, the US banking crisis. And then the other theme is, yes, go ahead. Sorry, was there a question?
No.
No, okay, I heard something coming in. And the other thing is, a theme is around big tech and artificial intelligence. Clearly, there's been an explosion of interest in the artificial intelligence in the last 6 months. We've seen that really animate investor interest in big tech. And you can see that any mention even of AI or ChatGPT or Bard is now leading to a real spike in stocks. My thesis is that large cap tech stocks are now akin to a safety trade, in that it's difficult to bet against large tech currently, even though they're not really traditionally defensive stocks, because of the investor enthusiasm around AI, which may be a hype cycle, but because of that, it's been very difficult to essentially be anywhere else in the stock market other than in large cap stocks. And I've shown some charts later around the concentration of markets, and how when markets are very concentrated like that, it does suggest that perhaps they're not as robust as they may look otherwise. So clearly quite a bit of a mixed picture in equity markets. I speak about doom loops and wage spirals. The doom loop is what reference to that crisis in the UK around September, October. We think there could still be some collateral damage from that. And clearly the wage spiral is what we're all focusing on, is whether that may be something that drives inflation. So those, I don't want to go into too much more detail, but those will be the macro factors that we're focusing on. When it comes to the impact on your portfolio, and the next section, and that starts after page 96, you can see that the real dominant force in global equity markets was US markets for the start of the year. The FTSE is traditionally more defensive, and more old economies, so there has not been the same kind of rally there. It doesn't have as much exposure to tech. But that is good for you, that you have a global portfolio. It is well exposed to non-UK markets, and equally not well exposed to non-sterling equities. So that even if sterling is weak, that gives you a boost. Sterling was actually still net gaining some strength over the course of the last few months, but not to the extent that they would have had a huge drag on your portfolio. So that bodes well, the fact that you have this global equity exposure. We dig into fixed income, and I think this is going to relate to Betty's section later around private credit. One of the suppose the winners and losers in the bank crisis has been that there has been a pulling back and a general expectation of more bank regulation, and there will be likely a pulling back from some of the lending that banks have been doing. This certainly goes for the US. There may be that contagion effect in the UK. And when banks pull back, this opens up the possibility for private credit to enter the fray. So we've seen the possibility for private credit to step in, and in fact, private credit is really burgeoning as a provider of financing. It's now gone from about 4% 20 years ago to about 18% of credit markets in the US alone in 2020. So clearly continuing to grow, and that because your portfolio is exposed to private credit, we think it will be exposed to both the winners and the losers in the any kind of a reckoning that may occur in banks. So again, that bodes very well for that section. As far as what we're looking at going forward, we are still quite focused on these points I mentioned before, the inflation picture, what happens to UK bonds. You still hold UK bonds in your portfolio. If there is a crisis of confidence in bonds and less confidence in the ability of both section, monetary policy and fiscal policy, to be joined up, that could have repercussions for UK bonds, which could lead to losses on that side of the portfolio. And also looking at those other macro factors, such as the regional banks and the ongoing support for AI as a way to see where the dynamics will likely fall in your portfolio. So I'll leave that there. I know I joined a little late, so I don't want to take from some of the discussion you've had, but I'm happy to take any questions.
Okay, thanks, Ethan. Back over to Betty.
No, I don't think there's much to add. I was just to clarify. Interestingly, our bond holdings in the UK are mostly concentrated in some of the multi-asset managers. The corporate and government bonds is a global fund, so it's dominated by US, not exclusively. That was a decision taken in 2019 to diversify away from just one market.
Okay, thanks, Betty. So again, any members or indeed board members have any comments or thoughts on what you just heard? In which case, thank you very much both for joining us, and we'll move on to item number 9. This is not Alex. I think it might be good for Alex's throat to recover. But for this item, we move over to Joanne, who's the administration manager for the fund. So, Joanne, over to you.
Thank you, Chair. So the purpose of this report is just to give a Pensions Committee an update on the work that's been carried out in the pension administration team. So around this time of year, I like to look back over the work that the funds completed during the last year and look back and see how that compared to the year before. So the first party report sets out in the table the work that was completed during 22-23, and the table underneath that then sets up the work that was completed in 21-22. So looking at the data, you'll be able to see that more work has been coming into the fund compared to last year, and the number of cases being completed has also increased. The largest increase can be seen in employer retirement estimates, as a number of employers have been carrying out some redundancy exercises and asked for quotes. The second largest increase can be seen opt-outs. That's members deciding that they don't want to be in the scheme anymore. And during 21-22, the fund received 263 compared with 403 in 22-23. So you can see the number of members opting out is increasing. Also, the number of new starters that we've received has increased as employers auto-enroll their staff back into the LGPS pension scheme. That's something that happens every 3 years. And in addition to that, the fund has carried out a number of recalculations. So that's members who had a backdated pay award who had left the fund, but they were still owed pension for that backdated pay award. So the fund's carried out 320 of those within the past year. So I just thought it'd be good to share with committee the amount of work that's been carried out and some background about the differences in this year and last year. Moving on then to My Pensions Online. So My Pensions Online is an online system that we provide to our members. They can access My Pensions Online and have a look at the pension that they've built up. They can carry out estimates to see what their pension would be when they retire. And they can also do things like change their address, bank details if they're a pensioner. And that information comes through automatically to us through the system. And that is a system that's available to members and also councillors. So just to say, if you are a councillor and you haven't signed up then, I encourage you to do so. So the number of members registering is continuing to increase, as you can see in 5.1 of your report. We are expecting a large increase in the months of August and September, when we send members their annual benefit statements, or we send members a letter asking them to register or log into My Pensions Online to access the annual benefit statement. So the annual benefit statement is a requirement by law that we have to do every year, and basically it provides members with a view of how much pension they've built up and predictions then of what their pension would be at their normal pension age. So we're hoping that the number of members signed up to My Pensions Online will increase when we send that communications out. The next couple of months is going to be a very busy time for the systems team, as they'll be carrying out year end. So every year we receive data from our employers, data about their pensionable pay, their care pay, contributions, etc. We receive this on a monthly basis, and we have to receive 12 months worth of data by the 31st of March, or as at the 31st of March. And then that data then is used to generate members' annual benefit statements and calculate their annual allowance. So deadline for submitting the data to the fund was the 30th of April. And we have now received all the year-end files. So the systems team over the next couple of months will be carrying out exercises to upload the data and reconcile it to make sure that it's accurate and correct, to make sure that we produce accurate annual benefit statements for our members. Moving on to point 8, Alex has mentioned about the valuation in a report earlier, but just to let you know that the funding strategy statement and accompanying policies have now been published to the website with regards to the valuation. Moving on then to some legislative changes. So on the 9th of March, the Department of Levelling Up Housing and Communities, who create the regulations for the LGPS, published a response to changing the annual revaluation date in the LGPS. So every year the pension is revalued in line with CPI, and that's normally done on the 31st of March. These regulations are going to change it to take effect from the 6th of April. So they published their response, they're accepting the consultation changes, and they come into effect on the 31st of March 23. So we've recently had a system upgrade which has brought in these changes, and we're testing that at the moment to make sure that it works correctly in preparation for the annual benefit statements. Just a couple of updates on McLeod as well. So basically, McLeod is going to address the discrimination within the LGPS that was brought in by the new care pension scheme in 2014. At that time, a certain group of members were protected if they were within so many years of retirement. it was deemed that that was not lawful. So that has been extended now. So more people are in scope of getting this underpin. So DLUC published a response to the amendments to the Local Government Pension Scheme consultation, and we're reviewing that. And they've also published another consultation, which is closing on the 30th of June, and this will cover additional topics that were included in the original 2020 consultation. So we're going through that at the moment and having a look what that entails. And then the final thing I just wanted to make Pensions Committee aware of was changes to the escape rate. So on the 30th of March, it was announced that the escape rate was going to change, and I updated Pensions Committee about this in the last meeting. And basically, as a result of that, we had to put a number of benefit calculations on hold. Thursday last week, we received the first batch of these factors. So we're looking to process these now, and over the forthcoming months, we're expecting DLUC to update the rest of the factors. So I invite any comments or questions.
Okay, thank you, Joanne. I've got two that are interrelated, but I'll wait until after anybody else has raised any questions. So any members, any questions or comments online? John? No? Carl? Obviously pop to the loo. Alfie, any thoughts? I've got two questions about the opt-outs, actually. So do we have any data on those people who might be boomeranging in and out? Or are there many who sort of will come out for a spell then come back in? And I guess there's another one, it might be a question for the authority as much as it is for us, the fund. I think what communication and what work are we doing with staff members to those people who are investigating opting out? What work are we doing to encourage them to actually stay in? Which I think it needs to be impressed upon the importance of not having any periods out.
Yes. So the first question, I'm not sure we've got data on people who are opting in and then opting out, etc.
Yeah.
But what will happen is if someone has opted out, then when their auto-enrolment date comes round in 3 years' time, they will be brought back into the scheme, and then they can opt out again. So, you know, they will be brought back in at that point, so they won't be out of the scheme completely.
Right, okay.
With regards to members who are or have looked to opt out, so what we are doing is we are speaking to members who have indicated that they want to opt out. We're advertising the 50-50 scheme because they can pay half the contributions but get you know, the same life cover benefits, etc. So we are doing that, and we've asked our employers as well to advertise the 50-50 scheme in particular to members to say, you know, at this time we understand it's a difficult financial time for members, but that's what we're pushing at the moment.
Okay, thanks. Okay, thank you for that. If there's no other comments or questions, so back to page 126, I would invite the members of the committee to note the content of the report. Is everyone happy to do that? Okay, yep, fine, in which case, thank you very much, everyone. Moving on to item number 10, which is the risk register update, which starts on page 127. Alex.
Thanks, Chair. So yeah, another quarterly update, but I think more generally and for the benefit of new members, this is another one of the key responsibilities really of the committee and supported by the work that the board do as well, is in terms of having a good understanding and appreciation for risk oversight and management of the scheme. The fund has maintained a risk register for a number of years, and broadly that considers the three sort of core components, which I would consider as the administration of the scheme. You've just heard from Joe on that. The finance and investment risk, which we've covered a lot in various discussions on the agenda today. And the third broad category is the governance. And again, we've had some reference to that through the work of the WPP, for example. Again, going back to the comments I made on the board, so a comment or an observation that's been made in the sort of last six months or so was around 2 points really. One, the fund, although it had a good, efficient risk management function through the risk register, there wasn't a risk policy in place. That was the first observation. I think the second was that the risk register, as it was constructed then, was extremely detailed, sort of 30, 40 risks, making it quite hard for members to sort of oversee the full extent during meetings and prep for meetings. So taking those 2 points on board, members who were present at the last meeting will recall a recommendation to approve a risk management policy that's now published. And again, I can circulate a copy for members' benefit, because I think it's helpful to have an appreciation for the work that's involved. The second point, which was to rationalise essentially what we reported to the members in terms of the number of risks, we took the approach of splitting that into like a two-tier register, splitting what we considered to be the strategic risks with what are more operational, kind of within officers, day-to-day remit to oversee and make sure that that's appropriate. What was proposed and agreed via both board and committee was that we would only present the sort of really detailed operational register on an annual basis, or when we felt that it was appropriate to bring it in for a more detailed conversation during the year, but that we would continue to report the strategic register on a quarterly basis. So what you find in the appendix to this report now is a sort of a dozen risks that cover those three broad functions I talked about. And as I said, there's no change to the way in which we monitor or manage risk, just to reiterate that point. We've just supplemented it with a policy that sets out our approach. And as I said, the way that we report the register now in that two-tier function hopefully makes it a bit easier for members to, I think, digest and have the opportunity to comment on what are the most strategically sort of aligned risks to the way that we operate. The remainder of the cover report really just sets out at a very high level how we rank and score our risk categories. There's more details of this in the appendix. I think this particular quarter, worth saying as well that the way that we cycle the report is that this typically would be seen by the board prior to coming to committee. So it's another key role of the board is to oversee risk management. And we've got some individuals on the board that actually have a background in risk management in terms of their day-to-day role. So it's quite helpful sounding board, and we take comments from that and bring them forward. In terms of the version that you see on page 129 of your papers, areas where there's red text reflects any changes since the last review a quarter ago. As you can see, no changes to risk scores or risk controls in this particular period. And actually just one notable comment really, and it is focused on investment. It's around the risk is inappropriate long-term investment strategy. And I think the comment made is just to reflect the fact that we've gone through that funding cycle I talked about earlier in the agenda, and are now underway an investment strategy review. So we would expect that we're addressing some of the risk, the risks of that risk materialising, if you like, as part of that piece of work. So nothing else to add in terms of, from my point of view, but happy to take any questions on this if helpful.
Okay, before I take any questions, I just wonder if Ian, as chair of the board, obviously as Alex has set out, you have the responsibility for overseeing the risk management process. If there's anything you'd like to add before I take it to members.
I'd just like to say I think the new format, the new way it's presented is a much improved format. I think it makes it much easier for both the committee and the board to comment and make suggestions on. It's a much more manageable format. I'm very happy with it.
Right, that's it. So, members, any questions, any thoughts on this? John, you've been on the committee for a very long time. Do you agree that this is a more digestible way of consuming the information?
Yes, it's definitely an upgrade. I'm much in favour of it.
Excellent. I think I'd second that. Just a comment that I was suggesting to both Joanne and Alex before the start of the meeting. It might be worth actually at one meeting, or indeed have a standalone sort of informal meeting. I think it might be quite useful to take those members that are able to come to that meeting, actually have a proper canter through the risk register at some point. I mean, if only from my own point of view, I've had to deal with these in the past. I've always grappled with the info better when we're discussing it instead of going through the cells on the spreadsheet. So I think it might be, we'll be in contact with that, because I think it might be worth thinking about it, actually having a standalone meeting outside the cycle, if people can make it, so we can actually attack it for a couple of hours, and whether that could potentially be a joint meeting, as it's an informal one, it might make sense for that to be a joint meeting with the board and committee anyway. Yeah, great, okay. Well, we'll look into that. Okay, in which case, page 128, the recommendation in paragraph 4, is that we note the updated risk register, which I think we're all happy to do. Nod, great, fantastic, thank you very much. Item number 11 then, back to Joanne, on page 135, the elected member training.
Thank you, Chair. So this is a standing agenda item, which provides an update to Pensions Committee on the training that's already been taken and potential future training courses that may be being held throughout the year. So the training log for 22-23 is appended to Appendix 1, and this just provides a record of members' training and education throughout the year. If any of the details are incorrect or are missing, then please let me know and I'll update that. Also attached in Appendix 2 is the annual training programme. This has been to Pensions Board during the last quarter, and this has been developed with a list of suggested training events scheduled to take place during the forthcoming year. One training event I would like to draw your attention to, as I know we do have a few new members within the committee, is the fundamentals training, which is a 3-day training course predominantly aimed at elected members, and it provides a scheme overview, covers current issues in relation to administration, investments and governance of the LGPS, and it's actually run by the Local Government Association. I know a few members went on it last year, and I think they did find it, beneficial. This is held in October, November and December. So it's 3 days, 1 day in October, 1 in November, 1 in December. There's the option to attend in person, either in Manchester or London, or there's also the online option. So following this meeting, I will send invites out to all the committee, just in case you wanted to potentially attend again, or if you did manage to get around to attend last year, and I'll ask for some interest. And yeah, that's the main update of the report. So I just invite any questions or comments.
Okay, thanks, Joanne. I think I have to declare the fact that I didn't complete the fundamentals training this year because there were railway strikes and some of them were cancelled. So I think I might very well just go to all 3 again. Okay. So I think it's a useful refresher for those of us who've been here before, and again, Alfie, Councillor Best, whatever I'm going to call you. It's probably definitely something to look into. It would make sense. So, members, any other thoughts on the paper or anything? No, in which case I'll take that as read. Thank you very much. So, here we come to the item number 12, which is the date of the next meeting, is the 11th of September 2023. That's for noting only, but like I said, if there's anything in between, like potentially like this suggested meeting, we'll contact both members of the board and the committee separately with that. Right, hold on, hats. Item number 13, agenda. Item 13 is the exclusion of press and public, so I have to read out this paragraph before we can continue. Right, so to agree, the exclusion of the press and public from the meeting as presentations and meeting papers are not for publication because in accordance with paragraphs 12 and 14 of Part 4 of Schedule 12A of the Local Government Act 1972, open brackets, as amended, by the Access to Information Variation Order Wales 2007, close brackets, it contains information about a particular individual and information relating to the financial and business affairs of particular persons, including the Council, and in all the circumstances of the case, the public interest in maintaining the exemptions outweighs the public interest in disclosing the information. So at this point, if there are any members, do we agree to ask for the exclusion of press and public from the rest of the meeting? Excellent. It's my discretion as to whether we invite the members of the pension board to continue observing the meeting. Do you have a strong view? No, in which case, if you'd like to stay, I'm more than happy for Ian and Anthony to stay. So, Geraint, could you please ensure that the recording of the meeting has stopped before we continue?